Welcome to another video. What we will be doing today is performing a full live analysis in the market, both from a technical and an order flow perspective on a pair to see what kind of potential trading opportunity we can be looking on that specific pair from a swing trading standpoint. Now, if you're new to the channel, I'm a top author on the TradingView platform, and every day I publish new free education analysis on all my platforms, so I really suggest that you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. In this video, what I want to do is give you a full breakdown of the situation that currently we have on NZD/USD, because the pair is very near to providing a very good trading opportunity. So I want to speak about it, and as usual, I will keep the analysis very educational so that you will learn exactly all the key concepts that you have to apply to your own trading. First of all, I will be explaining the technical situation that we have on the pair from a multi-time frame technical analysis perspective, obviously when it comes to swing trading. So we will be checking the monthly, the weekly and the daily chart, and obviously combine it with what we have from an order flow perspective, specifically institutional order flow. And then we will go and see what we have on the 4-hour time frame, which is our entry time frame. So let's start our full analysis. Starting from the monthly, what do we have? Now on the monthly, we have a market that is currently at a very strong level of supply. In fact, from here, the market had started all this move to the downside. And currently the market is retesting exactly this supply area from a monthly perspective. And also the market is currently testing an area from which the market can provide a very nice pattern. In fact, we have impulse, correction, lower low and equal high. Now, after you see a movement like this, so an impulse, a correction, a lower low and an equal high, what you expect is from here to see the market make a move to the downside to create this inverted head and shoulders before the continuation to the upside. Meaning that from here, we can definitely expect the market to give us a move to the downside to create this right wave for the creation of the head and shoulders pattern, specifically an inverted head and shoulders pattern. So from a monthly perspective, we expect a wave to the downside. Going down on the weekly, what do we see? Now on the weekly, we can clearly see that the market has just created a very simple impulse, correction and impulse pattern to the upside. We already wanted to see from the first place this movement to the downside. Why? Because we had already made two previous analyses on NZD/USD. In fact, on the daily time frame, what did we say in our previous analysis? First of all, I explained all the reasons in an analysis for which from here we wanted to see the market create a lower low. And then again, we spoke about NZD/USD after the market had created this move to the downside. And from here we said we want to see the market make a move to the upside, go and test this previous support, not on resistance, and create the continuation to the downside and a lower low, which is exactly what the market did. And I will link in the description of this video these two previous analyses in which we expected these two movements that the market created exactly as we wanted to see. So you can go and check them out for further reference and more free education, because you will see all the reasons for which we wanted to see exactly the moves that the market created. And then the market created this move to the upside. Now, if you're asking yourself, how could we expect the market to actually create this move to the upside? Because the market had created 5 waves to the downside. And as I said also in a previous video a few days ago, after the market creates 5 waves, you can expect a reversal of the trend. In fact, we have 1, 2, 3, 4, and 5. And after 5 waves, big reversal to the upside. Now, going back to our analysis, in creating this move to the upside that is currently testing the supply that we have on the monthly inside of this area, what kind of pattern has the market created on the daily? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or speak about in the next videos. On the daily, the market has created this overextended W formation, which is a bearish pattern, which is currently testing the supply from a weekly perspective. And after an overextended W formation, what you want to see is the market make a move to the downside and go and test the previous resistance, which is now turned support, which is the neckline of the W formation. So from the monthly, we would like to see the market give us a move to the downside to this level here, which is exactly the previous daily, previous resistance, now turned support. So we definitely would like to see the market give us a shift from a monthly supply, testing the daily support, which is the completion zone of the daily W formation. So situation at this point is very clear. Monthly, weekly, and daily are showing a very clear pattern and scenario. Let's go and see what we have from a COT perspective, because up to now, situation is very simple. We want to see the market give us this move to the downside. So first, let's see if this move is backed up by institutional order flow. And then obviously we will go down on the 4-hour time frame to see what we have from a 4-hour perspective. Now, starting from the NZD, what do we have? Now on NZD, we can see that with the last report, net positions increased from 3.7K to 4.1K, with 1K shorts getting closed and another 700 longs getting closed with the last report. So clearly on the NZD, we can see that even though net positions are increasing, however, longs are not getting added anymore, which means that we can definitely get a retracement from all this strength. And if we go and see what we have from a USD perspective, do we need to check what we have from a USD perspective? This is something that I need to explain. If you check the data for the NZD, you are actually already checking NZD USD. Why are you already checking NZD USD? Because all currencies on the spot are traded against the USD. So if you're checking the commitment of traders for the NZD, you're actually already checking NZD USD. And we clearly see this. We went from negative net positioning to positive net positioning. So we definitely expected this move to the upside, specifically after the 5 waves. However, with the last report, longs are not getting added anymore. So we can definitely expect a retracement. However, just because we expect a retracement, can we take a short? Obviously not, because trading is reactive. Trading is not predictive. And the monthly, weekly, and daily, combined with the COT data, are the best time frames when it comes to the direction of the market. But when it comes to entry, the best time frame for entry is the 4 hours. So with students, how we will be approaching this kind of situation? Now we will go down on the 4-hour time frame and see what we have. Now at the moment, the structure on the 4-hour time frame is absolutely bullish. So obviously we cannot be looking for any shorts, but that is not a problem because we want to wait for all the conditions to be perfect for a move to the downside and all our rules for the short to actually be satisfied. So with students, what we will be doing, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, after shifting from a bullish to a bearish market, at that point, we will be looking for a short with a very good risk to reward and very good probabilities for the market to actually provide to us this move to the downside, and obviously we will capitalize on the move. However, it's very, very important to understand that if everything will remain as it is right now from a 4-hour perspective, then the market will easily continue to the upside and we have to adjust our analysis to the new market structure, and as usual being always ready to adapt our analysis to the ever-changing market conditions and market structure. So at the moment, if we will see the shift, we will add it on watch list. If the market will remain like this, the market will easily break this zone to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me personally answering every single question that you have every day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the program.